All right, hello everyone, and welcome to this live intraday webinar on SB Trade Desk. Mike Boutros here to kick things off this morning. Good morning to everyone in the room. So we're pretty light on data to start off this session. Obviously, tomorrow we do come into the retail sales data for the United States, which is likely to shake up the dollar pairs. The dollar has popped through that index resistance that we were looking at yesterday. Some beautiful plays in overnight, guys, from the scalp side. On some of the crosses that we highlighted last night. So we'll take a look at those. As always, your questions, concerns, pairs, trades are more than welcome. So let's jump right into things. Here's a quick update on where we are to start off the session. Relative performance does have the dollar stronger against all its major counterparts to start off the session. Obviously, guys, today if you've been watching CNBC or Bloomberg or Reuters or the like, the talk of the town has been the euro dollar, which continues to press into fresh 12-year lows here. Not really a trade from the scalp side that we're per se interested in, guys. It's a one-sided trade. If you catch a decent swing and you want to try to scalp it to the downside, there's nothing to stop you. Just from a setup standpoint, from a trading mentality, it's not something necessarily I'll be interested in on this side. But certainly a precipitous fall. And we'll take a look, guys. If you want to take some key levels, we'll take a look at that as well. All right, so I just want to go through the trades from the intraday page real quick. We'll go into some pairs. I saw you guys request the grandpa trade is popular here today with the with the euro pound coming into these lows. We'll take a look at that in a moment as well. So first things first, the good old British pound. Here's what this looks like today. So we got data out of the UK last night, or this morning rather. Industrial production, manufacturing production, a little bit weaker on both counts on the month-on-month, year-on-year, broadly in line on industrial production. Largely told you didn't really see too much of a major market reaction. And remember, for the pound, guys, we're working with a broader downside bias. That hasn't changed. I left that in the notes. So we are looking for short triggers, but the weekly opening range is taking place over such a nice key support near term. So, it's... For me, the prudence is to break below 50.20 and play the downside into 49.50, or to see that topside breach above 51.45, and then you look to play back into the invalidation zone near term. So it's been a pretty tight range. The only real trade that actually came out of this, guys, the only clear signal that came out of this week was that Monday trade. On that trigger break below 50, and then a push below the opening range low that gave you, a nice 40 pip drop there. So this is still the range in focus for the pound, not really the major scalp setup that we're in play right now, but certainly something that will pan out hopefully as we get into the latter part of the week. Again, retail sales tomorrow. UK data is pretty much spent for the remainder of the session, or the week rather. You do get construction output figures on Friday. Not likely to be anything major market moving. At 11 o'clock today, in a couple hours, you do get the NIESR GDP estimate, not a major market mover, medium print, but again, that hits the wires at about 11 a.m. Eastern. So I don't want to spend too much time on the pound, guys. There's really not much going on here. This is still the major key pocket zone of support that you could see the drop into before you mount any type of substantiated rebound, and this is also the near-term bullish invalidation level. The same thing you're looking at on the scalp charts at 149.50 level. So, leave that or keep that expectation open for a possible drawdown right into this region. Before we move on to any other dollar crosses, I do want to just take a quick look and show you the index we've been watching for the last week or so. Today's close is going to be paramount. Okay, today's close is going to be paramount. That 12,049 level, guys, is 100% extension from the advance off of the lows that you made in 2000. Keep doing this every day. 11 at 12,049. So a topside close here, it's going to get real sparing as far as trying to find targets. You're basically looking for the upper median line parallel that comes in somewhere around 12,170, 12,165. Basically today's low is what you need before you start to even shift the scalp bias to the downside on the dollar. Also, just want to note that momentum is in overbought condition, so this is not when we want to start trying to fade, call tops. Things can stay in an overbought condition for an indefinite time period. So it's really going to be that drawdown back sub 70 that we'll be looking for before any type of conviction short on the dollar starts to materialize. Now, just because that's the case, it doesn't necessarily mean that you're blind long dollar against all the crosses. It's a very poor attitude. We're just noting every trade on its own merits. So on the index, 12,049 on the close today is what you want to see. A push below this pocketed region of resistance we highlighted yesterday, basically like 12,025, would put us on a little bit more of a corrective stance near term. Okay? So dollar index pressing resistance, sterling dollar sitting on the opening range, right? Sitting right on the support line. Here's what dollar yen looks like. We also highlighted this yesterday. So I gave you guys a heads up on this. I hope some of you caught that trade. Nice, really clean trigger break into divergence. Like I said, and I'm going to keep saying it here, guys, in these webinars until I drill it home. 9 times out of 10, I will take these signals. Okay, divergence into the lows, followed by a trigger break, a 3-point trigger break nonetheless. Okay, the divergence here wasn't quite as obvious. Remember, we're not looking at the wicks, only the body. So you have a slightly lower low, but a pretty nice higher low here, a little bit more magnitude. So you had some divergence into the lows. The spike came right in to the median line, and then a trigger break to the upside. Okay, so the long side, like I said last night, was initiated here. We were looking for 121.36 into 45. That's this pocketed zone right here. The pop came right into that. You got to pull back to open up the European opening range. Then we broke the European opening range high. So the long bias near term remains in play. This is the caution here on the dollar yen. If you're still holding this, I'm out, guys. I had a limit take us out in an overnight trade at 21.40. I always put my limits on the inside. So obviously a little bit frustrating when you wake up and it's still going, but nonetheless, the upside bias is still in play. The only thing I want to caution you is that the opening range for the U.S. is panning out now. And again, momentum is holding sub 60, not typically what you want to see if we're going to continue to hold that upside bias. So if you're still holding that long from last night that I tweeted, guys, just make sure you have your stops below the opening range low for Europe. Again, for me, from a prudence factor, if the trigger gives out here, into the open of U.S. trade, I'll want to give out. Remember the warning that I gave on Monday, guys, is still in effect, okay? On the daily chart, the possibility, or I'm not just fear-mongering here, I just know the yen very well, the probability or the risk for a serious washout below here remains. We got that yesterday. I don't think anyone's going to deny that this dropout was pretty precipitous, but it's just classic dollar yen type fake out moves. So I'm just saying that as a word of caution. If you are scalping this, I'm personally using half leverage on all these upside trades, on any trades for dollar yen for that matter right now. So I just want to give you guys that caution, but nothing's changed. Okay, from overnight, you're still constructive on the opening range breaks. If the trigger gives out, cancel that. Okay, take out any long exposure. Not necessarily want to be short unless we break the European opening range. So just a note there on dollar yen. I'm not sure I necessarily want to take a short position, guys. If the trigger gives out and you have a really nice stop against the highs, let's say the opening range for the U.S. pans out just above that 21.36 level, then the trigger gives out, that actually might be a really nice short position right back into the median line again. Okay, just basically 121. At the end of the day, if this thing continues and breaks through 60, the long bias holds. Near-term targets, same as it was on the rally that we made earlier in the week, 21.75, 21.80. All right. So remember, this was the bearish invalidation level, right, coming into yesterday. But the reaction that we got and the perfect tag of that upper median line parallel really caught it very nicely here. Right? Here's the last time we went into that. Any questions on dollar yen before we move on? Okay, so dollar yen near term resistance 21.75, 21.80 here near term. Moving right along from the dollar yen and the sterling dollar setups, we move on to sterling Oz. She's a beauty, guys. I mean, you have to have some patience. Again, it's kind of frustrating because we got stopped out in the first attempt. But listen, calling the turn is never going to be easy. That's not what we're trying to do. Because we're scalping, because we're near-term trading, we can take stabs at major key resistances with compelling short triggers. We're not trying to call a high. Trying to call a high on a rally, guys, is someone trying to call, a dip back into like 93 on this stretch. we're playing level by level, and there's no reason within the broader uptrend to take these shorts. So that's the flexibility that our strategy grants us. That is the benefit of being able to take near-term exposure markets. And when you're trading something that's a longer range scalp like this, 51 pips, it's going to just have to be something that's going to be a little bit more of a love-hate and patience to catch it. But so let me just walk you through how this panned out. So this is what we looked like last night. If you recall in the notes, we were actually holding shorts here last night. Divergence into the highs has us holding shorts against this region. We covered half at 97.30. It stops at break even into tomorrow's data. So the pullback did come into the 97.20, 97.36 level. That took us out. Okay. The rally here in overnight trade did break or take the rest of the trade out at break even. So we only got half wattage on that one. But there was another trigger perfect right here again that gave out. Okay. And that's on ongoing divergence. Higher high, higher high, higher high, right? We take this new trigger here. Well, this was the trigger that took us out of the shorts. That if you were up last night on that break, that's something that should have taken you out of the short exposure. I was a little stubborn and thought we'd still get a rally and hold here. In any event, some divergence into the highs, followed by a trigger break. 9 times out of 10, that's something you want to be involved in. Okay. So here we are, right back at the 97.35, 97.20 target. The same short we played yesterday was a perfect opportunity to get back in this again today. So the benefit of being able to play, key technical ranges in the markets here intra-week is where our strengths lie. So near term, you're at support 97.18, 97.30. The ranges are a little bit bigger, guys, but you're working with a much healthier ATR. So give yourself some clarity there. Mark saying, by the way, Sterling Oz scalp was great. Thanks. Say more than welcome, Mark. So we're looking for a break of this low. This low defines the European opening range low. It's the 100% extension off the low here, excuse me. And you have basic trendline support right in that region. Downside break, you look right to the bullish invalidation level, near-term support, 96.30 into 96.45. Okay, with 96.46 actually being the stretch lows that you made yesterday in New York. So the levels are clean. The levels are clean. It's frustrating. I know Jamie tried to jump into this yesterday with me as well. You gotta be a little bit more careful with a pair that has such a larger ATR and a little bit more radical. So this is the daily chart that we highlighted yesterday. Look at that pocketed region of resistance we talked about in the webinar. Literally caught it almost to the pip, right? So momentum holding sub 60. We'll see if this range holds to the downside. At the end of the day, this is still, okay, just for the record, this is still your bearish invalidation level. So heading into the U.S. trade session, topside pop through 98.50 and sayonara. I mean, 98.86 is the high day close, but you're essentially looking at a confluence a little bit higher up near 99.40, which is going to be the highs that you made for that late February swing and a basic 88.6 of the entire range. So we will be watching this one with great care as we head into tonight's Australian data. So for those of you, again, quick reminder, tonight we do get employment data out of Australia. We are expecting the employment gauge to look like this. Again, about 15,000 jobs, unemployment expected to hold at 6.4%, participation rate expected to hold steady at 64.8%. So we've seen larger swings in the employment numbers here for Australia over the last couple of months. Sometimes they have charted some really nice moves on the back of what the RBA has been saying. I don't really know if we're going to get much play on this one, barring, obviously, remember on all of these prints, we're playing the deviation off the expectation. Okay, so we're expecting 15,000 jobs. If we get a contraction of 15,000 or a gain of 30,000, look for that to charge some nice trigger action in the Aussie crosses later tonight. What trigger would you be watching to go short for Sterling Oz at this point, Eileen says. So the trigger on the 30-minute, Eileen, is not actually that impressive at this point. With the actual stretch lows for yesterday's Asia Pac session and today's European session, right at 97.19, 97.18, I'd be watching price action more importantly today than necessarily a trigger. The 5-minute is going to be what we're going to want to check out here. The 30-minute doesn't really have anything. just as a disclaimer, Eileen, objectively, she says, okay, price breakdown. Price breakdown, sure, but objectively, Eileen, when you're coming to something like this, it's inherently going to be the 40 break, okay? Because remember, it's been an uptrend since the start of the week. So what do you want to see in an uptrend? You want to see 40 hold support on every rebound here, and 60 breaks on the upside, which is everything we've been getting all week long, right? So if the 40 break happens, it's going to be the first 40 break of the week, and typically that'll put the onset on. A quick reminder, again, don't take my word for anything, guys, never. Never take anyone's word for anything in trading. You got to see it for yourself. And I could just quickly point out last week's price action. Here's last week's opening range. Here's the March open. Momentum, you're still breaking above 60. You were in an uptrend. There's the first 40 break of the week. Obviously, it was data-driven, but nonetheless, it was the opening range break. That sets things off. And every rally, you want to see a 40 hold. You want to see a 60 hold. NFPs is NFPs, right? So here we are again this week. You're starting the week on a constructive path, 40 holding as support, a 40 break here with a break of the opening range low, basic trendline support, and that 100% extension would be the onset in my mind for a nice decline there. Does that make sense, Eileen? Says, okay, okay, RSI break 2. I mean, it's something objectively I'll want to look at for sure to see that 50 shift. Again, you're looking for a graphical representation in momentum, guys, that things are turning over. I just want to see something real quick. I don't think it's going to do anything. Nope. Okay. Let's see what the 5-minute looks like. Maybe there's something more compelling. Yeah, so guys, I'm going to leave these lines on here just because I don't want to have to redo all those, but if you just bear with me real quick, there's your resistance trigger. If we get into any type of short exposure, that's what once it takes you out of that. And here's actually a near-term support trigger you might want to watch, Eileen. Heading into the U.S. Open. Remember, these triggers don't do jack unless price is moving with it. Okay, so if the support trigger gives out and goes right into 30 and price doesn't clear these lows, that's nothing. Okay, that's nada. If price goes right through this resistance trigger and plows through and price doesn't clear at least an opening range high of some sort, again, that's not a play for me. So just to keep things on an even keel here, just as a disclaimer. But those are triggers I'd be looking at near term, Eileen, to see if we can get this break. Okay, so any questions on yesterday's Sterling Oz setup? Eileen says, yep, makes sense. Okay, thanks for the 5-minute too. Hey, more than welcome, Eileen. Okay, moving right along, the last one of the currency crosses, I believe, is Kiwi. And another one, guys, it's a slow burner, definitely. For a guy like me, it's pressing patience, but you know, the levels are still ridiculously clear. So here's what we were looking at yesterday. Remember, at the start of the week, we highlighted this range on Monday's webinar as the opening range for the week, setting up at key support. I tweeted this chart, excuse me, a couple times too. I still think it's the most compelling charts out of the com block. I mean, from a trend line analysis type of play, I know you guys have seen this before, but look at this range. Look how many times we've caught reversals, break, reversals, consolidation, reversals. We started the week right there, and the game setup was, listen, break below 73.30, you're going to look to play the downside targets. A break above 73.90, 73.88, the opening range, you look to play it back into resistance. Didn't fail to deliver again. Same slope range. So again, I just enlarged this to include, guys, the opening range for the week, just for your graph, just aesthetically make it look a little clearer. But the break below here set a downside motion. Initial target 72.68, secondary target 72.25. Just missed, think by like half a pip or something. But long story short, this took us out of the short exposure yesterday. So on the pullback, the limit was 72.68. You know, the next target down, it would have been a nice hold. The trigger did break to the upside and gave you a little bit of a rally. The following support trigger that we highlighted yesterday, okay, in the piece here, that support trigger did give out. It was a little bit tight, but when it did yield a drop from that 72.70 level right into the 72.25 barrier. remember, a quarter of the daily TR, you're only looking about 23, 25 pips here. So it's something we'll need to be a little bit more patient on. Someone saying the sterling dollar is breaking down right now, Eileen. Let's take a quick look at the pound. All right, approaching the European session, opening range low. Again, guys, like I said, for this one, I'm not really going to be keen necessarily on aggressively pressing a short. We can try to take a small position here if it breaks on the momentum pull below 40. But remember, you're still above the key support. The weekly low from last week is still 50.20. That is not the actual low is 50.20, guys. 50.18 is not the low. That's an 88.6 retracement. So there is some technical support there as well. If you're not already holding shorts, even from a scalp perspective, it's a little bit hard to get excited about it, which is why I was telling you earlier in the session, I kind of just want to see the opening range for the week get resolved already. That's sort of my issue with this. If the opening range was right at the lows and you got a clear break there, nice. It might be actually worth a play. But here, you know, the opening range high for Europe is way up here, Eileen, 150.95. So it's a little bit spread out already for my liking. You could get a nice settling right into here and it holds. If we make it out the underbelly of 50.20, guys, you know, you're basically looking for 49.50, but I'm not sure from a trading standpoint there's actually a setup for us here yet. We'll have to monitor this one. I think we'll get a better play on Sterling Oz. Let's just see if that finally gives us a crack too. Thanks for the caution, says Eileen. Yeah, I mean, guys, at intraday, we have to pick and choose. There's so many setups at play. You always want to be cherry picking. You know, that's a reason I put out, you know, 4, 5, 6 setups on the intraday page, just because they're not always going to be primed for go, right? Sometimes you're going to have to cherry pick which ones are better positioned, which ones are giving us the clearer signals. But the Kiwi dollar, back to that real quick. Any questions on that setup? The only thing I want to caution on the Kiwi at this point, or I guess the major thing I want to just look at the Kiwi on this point for the 30-minute, is that 71.80 into the lows. That blue line is not actually a low. It's actually a 1618 extension from the decline off the highs that we made in October of 2014. So a longer dated scalp. The 100 offered some really nice pivots way up here at 74.60, and it comes just above the lows, which was 71.80. So that's the next downside target here with a break below 72.25, guys. This is this region right here, just below 72. So we're not quite out of the woods yet as far as finding some support for the Kiwi. Again, the building ongoing divergence into the lows. Yes, at this point, you don't have any triggers on the long side, but this is what I'd be watching near term. Okay, a downside trigger here with a break of the opening range low. It's a real tight scalp, guys, but you do have 25 pips. A quarter is only 23, so you might be able to play that one. And a topside break here. You look for a recovery back into the same opening range lows. Takes you right back into like 73.30. All right. Strong downtrend. Opening range broke. Everything looks good. You're just going to be cautious about that divergence. And if you do get a trigger break to the upside, you probably want to duck out any short exposure near term. That being said, look for 72 here on the shorts. All right, last but not least, real quick, I don't want to spend any time on this, but gold, it's going to be a snooze fest, I think, for a while. At the end of the day, you're either looking for that 1150, 1155, or, you know, any type of breach above that highlighted region. So here's what gold looks like. Remember, this was a major area of support on the break of the weekly opening range. Here's your Monday candle. We said 1175 is going to be our bearish invalidation level. Yesterday's opening range cleared, or yesterday's drop cleared the Friday low. You got to drop right into 1155, which is the first target. That's still support. Okay, it's more broadly seen here on the weekly chart for gold as a longer dated 618 retracement. This is off the advance from the 2008 lows, and also basic trendline support. So that's 1155, and then you get into 1151, which is going to be the 1618 off the highs here. So again, a trade like the pound, guys, you're coming into support, so I'm not sure even from a scalping standpoint that we really want to be messing with this, but we want to look for a reaction here or a topside break here. That would give us a play for the upside into trendline resistance. But you stay short below You stay short below 1168 here. And you can envision a scenario, looking at the momentum signature, you can envision a scenario where, you know, the pair finally drops into that key support right here into 1151, 1150. Momentum drops into 30 and then gives us a little bit of a rebound. Maybe another short opportunity with a rebound back into that 1160 region. But I think we simmer down here on gold for a little bit. Again, tomorrow's U.S. retail sales data is probably going to be the biggest mover on this one heading into the end of the week. All right, so those are the trades that are highlighted on the intraday page. I'm good on time. I try to get through this for half an hour and leave half an hour for Q&A. So guys, let me know what pairs you want to look at, any questions, strategy-based, anything on the upcoming data. I do want to take a look at Euro Pound. I saw a couple of people asking about that early in the session. For those of you who've been with me for a while, you know I call that the grandpa trade just because of the lack of volatility we typically see in it. I mean, we're looking at pairs like sterling also the 50 pip quarterly ATR. Here we are looking at Euro Pound with a 62 pip daily ATR. That being said, guys, I do have us coming to some support. Listen, I'm not really huge on pivots in FX. Remember what the pivots are based on, guys. These are equity tools, really, my personal humble opinion based on the opens and close. Yeah, we do use the 5 o'clock close here in New York for FX, but pivots are something I take with a grain, maybe not a grain of salt, but pivots for me only become more critical when they line up with key technical things that we're looking at, i.e. trendline support, trendline resistance, a Fibonacci ratio, a longer dated moving average, a slope line. That's when pivots become more significant. That being said, you're testing the S2 right now, which is kind of a stretch for a pair like Euro Pound, and on a longer dated approach, you know, depending on how you're drawing your pitchforks, we do have a slope line here that's been mirrored pretty well off the highs, caught the lows here in September, caught the pivot at the start of the year. That also coincides right now on the S1. Is this something I'd be willing to do anything with, guys? Absolutely not. Again, my humble opinion. This thing could rally into 72.50 tomorrow. Would be a great trade. I don't know. I'm never going to press along with momentum in the oversold territory to that degree. And on a trade like this, guys, it's like death by 1,000 paper cuts. You know, this thing's going 62 pips. You know, it could just continue and sit there and dribble against you for the next 2 weeks, and it's going to be just a bleeder. So I understand the interest. Euro is obviously in a quite a dilemma here. But you know, that's not something that's going to have me prompting a move in this pair, you know, anytime soon. Listen, there is a momentum trigger that is here that has 5-point touch. That break is likely going to charge something to play the reversal. If you don't want to be long the pair, you use that rally to get back on the short side. Other than that, you know, your next downside target with a break here, guys, is basically 69.25, and that's just that basic 88.6 from the advance off the lows you made in 2007 here. So that's sort of my take on Euro Pound, guys. Listen, the thing is probably going to get some sort of crazy rally on a correctionary bounce or some sort of play, but I just don't see that as something I'd be interested in actually, you know, planning for. You need to get something to give this thing a go. 2004, 2005 are here as well in Euro Pound. So that was Mark talking about the 2004, 2005. Yeah, I see what you're saying. 2004, 2005, sure. Yeah. It's kind of messy, but it's here. Sure. My problem is just, guys, I mean, what do we do with our, you know, what do we do with our risk management here? I mean, I'm not going to just drop a long with a stop below the S2 because, again, it's just not my style of trading. But in any event, I do think we want to keep an eye on this very closely soon. Even on a scenario where sterling does make some sort of real deep pullback, I don't think the upside is going to be something I'll be interested in necessarily. I think if that pulls back, you just find a new short to get back in. Let's take a look at the euro real quick. I don't like I said earlier in the session, there's nothing for me here, but quick look at a basic trend line support off the 2008 and 2009 lows, or 2008 and 2010 lows rather, does have us coming near term. Whoops. Into support barrier not too far from where we are right now. Okay, this is the operative trend line we're looking at. All right, it's not the cleanest parallel, but nonetheless, we'll keep it in view. And beyond that, I mean, there's not much room . 104.35, 104, 104.30 would be a level. I mean 1990. I mean, are you talking about the Deutschmark? You're not even in Euro era at that point. So again, guys, I don't want to waste too much time on this. If you're holding the shorts, you're just bringing down your stop every day. That's it. There's nothing here from a scalper's perspective to do. You know, even if you get the triggers, it's the downside targets are the problem. So here's a clear break, for example. If you're really hell bent on trading it, the opening range for the week was pretty tight, less than 100 pips on that Tuesday break. You know, it never looked back on that move. So on these type of trades, you want to be nimble and just be involved, sure, but you know, not something you want to try calling the low on or getting on the long side of by any means. So does that help? That makes sense, guys? All right, so a quick look into just some of the comms that we've been following. Someone here was asking about copper yesterday. It's getting really dicey. This did not update. Sorry about that. Hold on one sec, guys. I thought I had saved this adjustment yesterday. Near-term support here for copper is still the focus range that we talked about on Monday when we made that outside reversal day off of this support. It's 260, basic 38.2 of the advance. Also, we've been straddling this median line, which doesn't really want to give us a break on either direction here. So I'm kind of waiting for a definitive move in here. Obviously, it hasn't followed suit for gold. So despite the fact that gold made that break and a clear invalidation of the monthly opening range, you're still sitting right here in copper. So something on the divergence level that you want to be cautious of, specifically if you're on the medium term here for some of these commodities. The momentum signature also going quiet here, so we'll want to see some sort of resolution to that consolidation. But near-term support, 260 is what you need to remember. The outside reversal close brings you into 266. That break right there would put me long into 271, 272, this region just above, or just below the 2014 lows, actually. With 260, a close below this obviously is going to be the invalidation level. For the long side, you'd look for a drop into these southern targets. So an interesting move in copper, and again, the divergence that you're seeing with what's going on in gold is what we'll be looking at. Another quick move here in palladium. Also, I just want to take a quick tick. I highlighted this opening range yesterday, or I think this was non-farm payroll Fridays. So there's the low that you made for non-farm payroll. It defined the opening range for the month, which was pushing into former support, now resistance, and a 38.2 confluence. So we've been waiting for the opening range to resolve. If this closes below 798 today, you're looking for a drop right back into 780, basically just below there. So that's one thing. Last but not least, silver is right in a major key support target. So again, non-farm payroll Friday did invalidate the weekly opening range there. The near-term support we talked about is 1515 to 1569. That's being tested here today. One thing I did want to note is this, guys. The momentum signature now has dropped. Let me maximize this for you. Has now dropped below 44 the first time since November. If we ignore that one just on that volatility spike, the last drop that we had from overbought territory or sub 60 was right here. It was a slow burn. Nonetheless, with price at support, it's something I'll be watching here. So a break below 1550, 1551 in silver does open up a decline into like 1495, just above 15, and you have a median line there that's in play as well. So some interesting moves that we're seeing here on the com block to open up the week as the dollar continues to press into fresh highs. Mark saying, first time I trade this, so thanks. Just got lucky, I guess, long at 70.15 at break even now. Right on, right on. That's where you want to be, at least as the break even trades. Just make sure when you're bringing your stops to break even, guys, that we are always taking something off the table. Okay. The only problem I have with people, bringing their stops into break even real quick is this, guys. When we're near term trading, okay, and you make a scalp of 20 pips or 30 pips, you have to have something to show for that, because our average trade size is smaller. So as soon as you get that ATR, you have to do something. Which is why whenever we're bringing our stops to break even or bringing our stops in, we have to be taking a profit and putting it in our pockets. Because if the stop goes back to break even, guys, and into wash, then the right call that you originally made, it's nullified, right? And it's true, no one went broke booking profits, but also no one ever made money breaking even. So we just want to make sure we're being prudent, but not too prudent. So when we get that ATR, take something off the table. If you want to take a quarter of the trade, a half of the trade, a third of the trade, I can't tell you what your risk tolerance should be, but just bringing the stops to break even alone, it's a detrimental way of thinking in my mind, because you have to have something to show for the original proper call that you made on the entry. So a quick note of caution there. All right, guys, so if there are no other questions here, we're going to go ahead and wrap things up. We're pretty light, like I said, on data. Remember, later today, 1 p.m. Eastern, my man Jamie Setley will be on for the intra-week, for the midweek strategy webinar, and we'll go over some of the swing trades that we're watching on that side of the desk. Again, we'll be on tomorrow morning at 8:30 Eastern for that U.S. retail sales print. We'll kick off the room a couple minutes early, guys, to make sure that we have a good grasp on things before that. And again, heading into tonight, watch for data out of Australia with those employment figures. Like, we're expecting 15,000, guys, unless there's a major deviation. You might not get that big of a play. The last read was a contraction of 12,000, so something to keep in mind. And it also saw full-time employment contract by 28,000. So certainly we'll be looking at some of the metrics for Australia later tonight. That's at 20:30 Eastern. Guys, best of luck trading. I will see you all bright and early tomorrow morning. Don't forget, 1 o'clock, Jamie will be on the horn. Till then, best of luck trading, guys. Cheers.